we are managing risk right now more than trying to gain exposure to the markets. We have a lower high that was set here just recently, providing another level of resistance. We're going to have some pretty important tests here if markets try to rally, particularly at this double top in the markets. Okay, let's talk a little bit about what you need to know before the bell this morning, because yesterday we got a little bit of a rally, and it was kind of a disappointing rally, just so to speak. We started off, had a nice rally, then kind of gave up about half of it by the end of the day. But the markets did end on a positive note, so that's good. Secondly, we kind of bounced off that 100-day moving average. That's good. And we were oversold on a relative strength basis and bounced off of that. So that's good. So we had a decent, kind of a bounce, an initial test of support at the 100-day moving average. Clearly not out of the woods yet. For the markets in general. Still on a MACD sell signal here, so again, that suggests that we're going to have weaker prices ahead. Again, doesn't mean the markets have to decline a lot, but ultimately it's going to really kind of suppress any type of upward action in the markets for right now until we kind of work that signal off and get back to a buy signal wherever that occurs. It's going to be hard for markets to make a lot of advance. This morning, futures are about flat for the open. So again, what we need to see here, yesterday the market rallied kind of right into the 50-day moving average, failed there. So we had an initial failure at that 50-day moving average resistance. We'll see what happens today, but the market needs to make sure and hold on to support here at the 100-day moving average. If we take that out, we're going to be looking at the August lows, which are also kind of in a line right now with the 200-day moving average. So there is definitely some risk to the downside. And our article on the website today, which is talking about kind of the 3 bullish and 3 bearish narratives of the overall market as we kind of go forward into this year. But the important thing there is, this is still clearly in a position to where we are managing risk right now more than trying to gain exposure to the markets. We have a lower high that was set here just recently. So again, that is also providing another level of resistance. We're going to have some pretty important tests here if markets try to rally, particularly at this double top in the market. So again, on the upside, there's a lot of barriers of resistance for this market to travel higher between now and really the end of the year. Now, I'm not saying it can't do that. I'm just saying that there's going to be a lot of resistance here as markets try to rally. And particularly right now, if we start taking out important levels of support, there's kind of big gaps between where we're currently trading and next big levels of support. So markets can kind of unwind here pretty quickly. And again, this is why we've talked about before, manage some risk, raise some cash, kind of rebalance positions right now. Those are the kind of those easy actions to take to lower your overall portfolio volatility. Unfortunately, we haven't got a decent setup in bonds yet to add bond, to increase bond exposure in portfolios. Those issues still remain very overbought right now. The 20-year Treasury bond (TLT), as an example, is pushing up right on new highs at the moment. We've got a very big move here. We're on a buy signal, so again, what's happening with bonds right now is very positive. And again, we've had a very, very long rally in bonds here for the last several months. Really, ever since the beginning of the year, we've had a very strong rally in bonds all across the board. But again, they're getting overbought on a short-term basis. Even they've got a buy signal at a fairly high level, and again, they're pretty extended from moving averages. So again, it's difficult to add bonds to a portfolio right now. So if you own them, great, hold on to them. If you're trading them, good place to maybe take some profits. But really difficult to try to add bonds to your portfolio right now. You need some type of pullback, probably to around 95 to 98 on TLT as an example, to get a better entry point to add bonds to the portfolio. And so we'll be keeping a watch on this, and of course, how we get there. But again, kind of watch the market. We're kind of in that tenuous spot right now. Manage risk. That's what's more important. Cash is a good hedge at the moment. That's what you need to know before the bell this morning.